Do not try and bend the spoon. That's impossible. Instead, only try to realize the truth.
What truth?
There is no spoon.
There is no spoon?
Then you'll see that it is not the spoon that bends, it is only yourself.
The Oracle will see you now.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. Guys, there's a lot going on in the markets right now. Is this the beginning, finally, of this top and drop? The Nasdaq's down 100 points as we're talking, or 300 points as we're talking right now. The S&P is down. Bitcoin made a new all-time high. Gold made a new all-time high. This transmission is going to focus on the US markets and crypto. Tomorrow, by popular request, I'm going to do another video specifically on commodities and worldwide markets. So tune in for that video. I'm including the Nifty from India by popular request as well. Guys, let's talk about the state of the economy really quickly because we had more metrics come out. ISM manufacturing came out. It's back at the bottom of the pandemic. Okay, that's where manufacturing is right now. We just printed the 23rd negative month in a row on the leading economic indicators. Why is this significant? Because this is the second longest run in U.S. history of leading economic indicators being negative, superseded only by the GFC, which hit 26. We're at 23 right now. I read an article on MarketWatch yesterday. They had an article they picked up from somebody else, Business Insider, Business Intelligence, and it said this is the strongest move in weekly terms. We've been up 16 of 18 weeks, the strongest move since 1971. This move in percentage terms has only happened 3 times in market history. But in weekly terms, it takes you back to 1971. What they leave out is what happened after 1971, after we had this parabolic move up like we have right now. What happened was the second largest stock market crash in U.S. history, the Nifty 50 bubble, where the S&P fell 66%, superseded only by 1929. That's where we are right now. The other 2 times we had this parabolic move up was just before the dot-com bubble. Oh, imagine that. And then just after the GFC. So the dot-com bubble ran up. We had this parabolic move, and then the S&P crashed 50%, and the Nasdaq crashed 84%. The recovery after the GFC, which had the S&P fall 57%. So that makes sense. So they leave that out of the article, that the 3 times we've had run-ups like this were before or after bubble disasters. I mean, that might be something key to understand in the marketplace, guys. So we're going to look at all the charts because we got to go over the key levels of resistance, the key levels of support, but understand the catalyst on deck this week. We have Powell talking before Congress tomorrow and Thursday. I expect him to be hawkish because we went the strangulation method on the economy. We didn't take the baseball bat to the stomach like Volcker did. I did a rant on this on last Thursday's video, guys. Watch that. I covered inflation in my monologue from the 1970s till today, why it's taking so long. But I expect Powell to be hawkish, and I think we got a foreshadowing of that with Raphael Bostic, the Atlanta Fed. He went out there and said, we may only cut rates once this year towards the back half of the year, and then we may pause. Now, remember, the market right now has priced in 3 rate cuts based on what the Fed said last year, because in a 2-week period, the end of last year, Powell went from we're not even talking about rate cuts to we're going to cut 3 times next year for 2024. Now they're talking about 1 time. So I think that's a foreshadow for Powell to be hawkish if he is. And then on March 12th, we have the CPI. If that confirms the inflation trend is going back up like we had in January, guys, this is the month, the spring equinox, of all black swans. There's market tops, natural disasters, as well as market bottoms. We had bank failures last spring equinox in 2023, New York SIG, SVB. We had bank failures in the GFC crisis. We had the market bottom in the GFC in the spring equinox. We had the market top and Y2K for the spring equinox. And of course, March of 2020, we got the plague. So just be prepared for anything. But the market pattern that we are following is still, I believe, that Y2K pattern. We have the same highs, the same lows, the same wave movements, and we are looking for our top, our drop, and then our pump back up to a new all-time high. Could that be starting right now in the charts? Let's go ahead and jump into it. Lee, let's start the show. All right, guys, this transmission, as always, is brought to you by our two fantastic sponsors. SimpleFX, our tournament is live. It is active. I'll pin the leaderboard link. You can see how much money you are winning if you're one of the leaders. It's going to be pinned in the YouTube comments, also in the video description. Guys, most countries in the world can use SimpleFX. It's a fantastic exchange. If you're in a country that cannot use SimpleFX, you can trade all the equities, commodities, and cryptos on BingX as well. All that information will be pinned in the comments and in the video description. Both will pay for your first month on our Discord. Message Lee in the Telegram with any questions at all. Today's video, guys, I'm going to focus exclusively on the U.S. equities and crypto. Tomorrow, I'm going to release a special transmission on commodities and worldwide equities, including the Nifty in India. So tune into that video to see gold, which hit a new all-time high. We'll look at the silver chart, energy, and then markets around the world. Let's go ahead and kick this off. So the monologue, guys, I always talk about the Y2K fractal. If you watch these videos, you've seen this before. Look at my screen. This is the run-up to the dot-com bust. We are mimicking, parroting these exact same movements in the marketplace. Look at your high, July of 99. This is akin to your July of 2023 high. Look at your low, October of 99. This is akin to your October of 2023 low. And this is the run up where you are right now. Now, back then, we did a 20% run up. Right now, the S&P is at a 25% run up. And this move here in pink, guys, this is the retracement I'm looking for. And then the breakout to the new all-time high. Notice this retracement is the exact same average in the current fractal pattern of 10%. That's the retracement I'm looking for. Shake out a lot of people and then take off of the new all-time high. And then that's your sell and go to the beach signal. And this is how the market is tracking now. Here's our current market, current wave pattern. You've seen this before, 20% up moves, 10% corrections. And of course, we're on a 25% up move, something that's only happened 3 times in stock market history. All 2 of the 3 led to massive bubbles, and the third one was a recovery from the GFC. So again, this is not a good thing, but I think we're going to fall, retrace, base, come back up, take out our all-time high, just like Y2K. Let's go over this on the daily chart. Daily chart, guys. S&P right now is 50.93. We took a short here in the room right up here. We had a trade posted between 51.46 and 51.63. Why 51.63? Because that was that key level of resistance we covered in the last video. And we got up to 51.57. So this came down. Nice little trade. It's just a little trade right now. It's what, 60 points in profit? Nothing big yet. But I think Powell's going to send this market down potentially lower if he comes off hawkish at this testimony, okay? If he comes off hawkish in front of Congress, and then we have inflation coming on March 12th, another bearish catalyst. It's expected to come in hotter once again. So this is where we're at, guys, an extended rally taking us out of our normal February timeframe where we correct, make a top, and then correct down, and then base. We're now into the first week of March, still looking for this top. Is this it? Well, the key thing is we have to have a trend change. To get a trend change, you need to take out this fractal of 50-60. Beneath that, you have to take out this fractal of 49.36. And beneath that on the S&P, you want to take out the fractal of 48.66. So let's talk about if this does start forming a bearish pattern. We may see a bounce back up because you get wave moves here, right? You get waves like this is how you make your 3-wave double tops, 5-wave head and shoulders. We may see a bounce back up. I don't know what Powell's going to say, guys. This is all just, my thoughts on the marketplace. But if this just starts breaking down, guys, where I think this is going, once again, a shallow retracement would take you to your previous Wyckoff accumulation zone right at that 4,800 level, okay? 48.08 right here, the 1 fib. You can see that. You have wicks up here around 48.40, 48.50. A deeper retracement, which would match in our pattern, these 8 to 10% retracements would take you down to fill this gap at 4,600. Let's go ahead and measure this really quickly. If we come down to 4,800, you're looking at a 6 to 7% retracement. If you come down to 4,600, you're looking at a 10 to 11% retracement. Somewhere in that range is where I think the S&P will correct to in this overheated wave that it is in now. It is still early. One day does not make a trend, but we have these bearish catalysts on deck. Let's look at the near-term support right now for the market. Go ahead and pull this up from 49.36. We have not even got to the 382 from this level, which is your base here at 50.73. Okay. I think towards the end of the day, you're going to see further acceleration probably to the downside in anticipation of Powell. Let's do a tighter fib retracement here. You got the 618, 50.88. So we'll see. Taking out that first fractal will be key here right at that 50-60 level, okay? That would be the first key to break down to this next level. View the market as levels. And of course, you have various patterns here. You could have a 5-wave head and shoulders here that ends up forming. You see this? Don't have any dirty thoughts here, guys. You see this? You could end up having a head and shoulders pattern that forms and starts breaking down. Lots of unknowns. We have catalysts in the market, but we don't know what Powell will say. We don't know how the market will take what he will say. What we do know is based on market history, we are overextended to the point we've only done this type of move 3 times in market history. All 3 were bubbles, okay? So let's go ahead and move forward. Wait, first let's check the indicators real quick. MFI, again, still bear. This is a broken record at this point. Everything's bearish divergence. Big move up, bearish on the money flow, bearish on the momentum. So we're expecting this retracement. If we look at the 8-hour time frame, guys, we went over this last video as well, looking at our key W pattern here that we had. We can, of course, take a fib on that W pattern. That's how we got our lower level target, the 1618 at 51.46, providing us with our kill box from the 51.63 range just above it. And that's where we got to. And now we have this nice little, what as of right now is a day trade. Okay. But it is a winning trade and it was posted on our Discord. Remember, anticipate. Don't improvise. We'll see what happens. This may very well just come back up for a weaker wave move here. Let's go ahead and check that on the fibs, actually. Normally, if you're looking for a bounce move to retrace, you want to watch this 618 and 786. And again, we don't know that this is a low. This could easily sell off into the power hour and the close. But as of right now, the retrace to 618 is 51.29. Up to the 786 would be 51.41. And for those of you that don't know what I'm talking about the market doing this type of 3-wave move, okay? Coming up to the 618 or 786, turning back down. And again, you'll have larger patterns such as 5-wave patterns, head and shoulders. Let's move forward. The NASDAQ, the NQ, guys, this is the E-mini. Looking at this, we are down 313 points, 17,948 at the time of this recording. But you can see all of these uptrends, guys, are still intact. You have your highs, your higher highs, your higher lows, all through trend. So you need to see this really start to break down before I get too excited about the move. I know the market's overextended, but you have to break down. NASDAQ needs to take out 17,826, which is only 100 points away. And then you're looking at the fractal of 17,372. And then to finish this off before you get down to that next level, 17,221. And I do think Powell will help us get there. So that's what I'm looking at here, guys. As far as where we are here on support, we can take this from the lower fractal pull up here to our high. Your 0.5 fib is 17,875. Your 618 is 17,756. And again, if we're looking at this from a resistance standpoint, what if Powell's dovish, right? What if he's dovish? I don't know what he's going to say. If the market perceives what Powell says is dovish, then look to see if you get a rebound. And if you get that rebound, watch this 618 at 18.2. Watch this 786 at 18,277. So that move would look something like this, and then see if you can break through it or if it holds as resistance. Because if Powell is hawkish, but the market doesn't care and wants to rebound, that could end up being a trading opportunity. Remember, guys, everything I say is my view on the markets, entertainment, education purposes only. Do your own due diligence as always. Where are the key retracement levels? Just like the S&P, you're going to look at your Wyckoff ranges over here. And without even using a fib, I can tell you you're looking at 17,000 right here, 17.1, but let's call it 17,000. And of course, your gap down here as well, just like on the S&P, is down here at 16.1, essentially 16,000. Those are my two key levels. So that means for retracements, you're looking at a move coming down to 17,000 for a shallow retracement of nearly 7%. You're looking at a move of 12 to 13% coming down to 16K. Big moves, guys. It's going to shake out a lot of people. A lot of people are going to FOMO back in, especially when you get guys like Tom Lee that will come out there and tell you generational buying opportunity. Then the market will base. We will come down, form some type of pattern as we decline, maybe 3 waves to a bottom. We will bottom, and then we will come back up just like Y2K, and I think take out the all-time high. And that's the trade I really want to be on. I want to be long down here at the bottom. I'm already short at the top. I want to be long at the bottom, and then I want to be short at that top, because that is going to be a lot of fun. You see it in the candles. Markets move. They sell off 3 to 5 times faster than they rise. It's the old escalator up, elevator down, okay? So just be aware of that. Let's go ahead and move forward. Looking at the Dow here on the weekly time frame, this is the YM chart, the E-mini. You're at 38,724. 39,277 is holding as key resistance, and you have a nice sell-off here in the Dow as well. It is down 421 points right now, okay? So again, look at your key support level on the weekly time frame, 37,965. Right here, okay? This cluster of candles. If you break that down, guys, I think the Dow's coming back down to 35,843. That is your previous July high. So let's look at these retracement levels on the Dow. If you can get through here, which is only a 3.5% decline to 37,965, and come down to one of these deeper levels at 36,777, you're looking at a 6.5% decline. And if you come down to your July highs, you're looking at nearly a 9% decline. So that's what you want to watch on the baby S&P. Let's go ahead and open this up some. Let's get some more candles. I know there's a few of you in the comments that like to trade the Dow. So let's look at this on the daily. Let's get rid of these fibs and see what we got here from a pattern perspective. Same thing as you have on the indices, guys. Parabolic rise up. So that means higher highs, higher lows, all the way up in trend. When we look at fibs here, how we can measure this, if we look at the deepest fractal here and pull this up, you have the Dow resting right now on the 0.5 fib, 38,719, 618's at 38,572. If you start breaking down below this fractal of 38,095, then you're coming back down to this level. Also in a larger pattern here, gives you a 5-wave head and shoulders pattern, just like we're talking about on these other indices, okay? That's the pattern that you could end up forming here on a daily time frame. So look at the indicators here. Indicators, again, we've been over this numerous times, broken record, bearish divergence across the board, no matter what you want to throw on here. I don't really trade with indicators. I just use them for confluence. I love the MFI. I always have something for momentum. And you can see your lower and lower momentum as you're forming a top. Dow just broke this baby double top here too. It looks like it did that today at the time of this recording. You can see this little baby 3-wave move, right? You just took out your fractal for the neckline. So look for this to come back down some and probably stall out here and see what Powell does somewhere in this mid-range here. Let's go ahead and move forward. Looking at the Russell, if you remember, I said I don't think the Russell will take out 2097 the high. You got right up to it at 2096.8. You sold off some. This is not a big sell-off, but you sold off from 2098 down to 2065 right now. The Russell I have doing this, okay? This is your big W pattern. Right now, I think it's going to fail at this level. I think it's going to start breaking down, start retracing, and I think the Russell's coming back down to 1813 where it will base, okay? It's going to base at 1813, come back up with the markets, and then I think you have your upside targets of 2200, 2300 on the Russell. This will be a great one to trade as well when you get that market FOMO back in the space after this move dies out. Let's look at some key support levels here. Right now it's 2055. You have to break that. 2023 just beneath that. And then you got this gap. Okay. You got this big gap here where you could come down from 2023 back down into the mid to low 1900s. So that's what we want to watch on the Russell, your small caps. AMD almost made it to our kill box. You never know. It still may. It's at 202.93 right now. We have this box designated from 232 to 216. And people are asking in comments, what does that mean, kill box? It's just a military term. I'm a military brat. But if you get a price pump up into this area, I'm looking for AMD to give us some type of tradable pattern here in this key resistance zone, this box, okay, aka kill box, 216, 232. Didn't quite get there. It may not get there. It's at 202. It did get all the way up to 211, but we have this beautiful W pattern here that gave us these projections to the upside. And we're within $5 of it right now, or at the peak of that candle. So we'll see how that plays out. Now let's go to Bitcoin. Bitcoin hit a new all-time high, and look at this is a 3-day candle. Look at the wick on that candle. So guys, a lot of people are asking me how I set up my fibs. As you know, I've been sharing these fibs as I do them. I have them all over the Discord as well. This is based off a fib projection, and you can see we hit that 64,299 within $90. It went $90 over on a $65,000 asset. So I left the fib here. This is part of how I'm giving you that top target of 73.7 up to 80K, 73K to 80K. We've been talking in the last couple of videos, will Bitcoin top and then retrace with the markets, or will it fall short and then start to retrace? Well, as of right now, for my target anyways, we fell short. We got to 69,333, 69,333. Again, these previous all-time highs, we took them out. As of right now, anyways, on a 3-day candle, we'd be closing below all-time high, but we made an intraday high here. And if you look at this, guys, we got right up above the 67K level. My 73K level is right here. And if you look at the previous, this is a small sample size, but the previous distance between these two tops, previous all-time high and then the last all-time high, 6.5%. And if you project 6.5% up, it lines up perfectly with that 73K. But what I think will happen, especially if Bitcoin does retrace with the markets, because it pulls back the rubber band. The way you got to view this is massively overextended. It pulls back the rubber band if Bitcoin does retrace and the markets do start to break down. So we get some type of breaking down pattern here. Maybe you can get a nice trade here. Got to see the trend reverse. Get some type of breaking down pattern. My two targets for the Bitcoin retracement, by the way, which is funny because JP Morgan came out with the same target I have. They came out with it, I guess, late last week, but you guys have seen it in my videos. We talked about 49K for a very shallow retracement, and I said 43,683 on a BingX chart because it pulls you back down here. These are big moves. JP Morgan came out with a 43K chart target as well. So if it does this move, let's assume this is a current all-time high. If it does this move and comes down to 49K, it's a 30% drop, okay? If it comes down to the 786 down here, it's a 36% drop, 37% drop. But I think with the FOMO in the market, with the rest of the markets, if they do top and drop and then pump up for new all-time highs, I think you're getting the same thing on Bitcoin, okay? That's why this matters where it goes to, because then I can get projections of what I see in the fibs. As of right now, 73 to 80K remains my target. I want to see what Bitcoin does. I don't want to just give you random numbers that you see all over the internet, because I need to see candles get a structure to give you Fibonacci projections based on proportionality, proportional moves in the market, because these targets get hit, guys. 1618 was hit, okay? These are key targets. And guys, if any of you are still in our trade that I shared October 23rd on YouTube, gave you the breakout from the diamond pattern, I have to brag on this for a minute, because it's 117% winner to the upside. If anybody held it through this cluster of sideways consolidation. And as you guys remember, in these consolidation patterns, I told you the bias was to the upside. And so far, that has been absolutely true, but 120% winner here on Bitcoin, guys. Looking at the 3-day chart, hitting the overbought. These oscillators don't matter that much for Bitcoin because it's so parabolic, it's so controlled. It has just over $1 trillion market cap. I mean, there's a dozen companies in the NASDAQ right now that have more than $1 trillion market cap. So, this is a small asset, but it can be controlled and it can be moved. But pay attention to it because it is still key. You're overbought in a 3-day chart, strong momentum. Do I have this on the daily? No, I don't. Let's go ahead and put this on the daily and look at this. Daily, you can see you have a lower high. Obviously you got way overbought in your MFI. So you have a nice big red candle at the moment here on the daily. Let me get rid of this drawing. Look at this. So you have a big, nice red candle after making this all-time high. And you can see on your MFI, you have this divergence, right? You got the lower high here forming. Momentum still very strong. So we'll see what Bitcoin does. If it wants to revisit, pump back up, or if you're putting in a topping process right now, which could very well be, because especially if what I think is going to happen with Powell, if the markets start to top and drop, which is what they're doing now, you could see Bitcoin do the same. And as of right now on the 8-hour chart, you guys see the 5-wave pattern? You have this move forming right here on Bitcoin, okay? This could come back up for a double top, drop back down. Maybe we get a recheck of resistance, give us some different variations to trade this. But as of right now, on the 8-hour time frame, you want to watch this move on Bitcoin. Does it start tightening up? Remember, these tighter patterns in Bitcoin, been talking about it the last few videos now, they tend to be continuation patterns, right? When you have this tight move here in Bitcoin, these tend to be continuation patterns, and the trend was up, which is why I felt confident in telling you the bias was up. I told you when you start to get volatility, that's when you could be looking at an actual top. And this is a little bit more volatility right now, going from 69,333 all the way down to 63,435. You can see the range starting to set here. So we want to see how these candles react. Even on the 8-hour time frame, you don't have a lot of candles yet. Let's look at this on a 5-hour. Not a big change. Let's look at the 3-hour. 3-hour, not a big change either. Okay, so I want to see what happens here in this range. Maybe able to find a good trade in here sometime soon, and I'll definitely let you guys know. We'll be talking about it on our Discord, of course. Let's look at Solana. Solana got right up to our kill box we've been talking about, guys. This fractal projection, or this Fibonacci projection here on the 3-day chart, was 140, 1272. Look what we did. We got to 143, sold back off to 133. Want to watch these areas on Solana because you want to watch this in confluence with Bitcoin. I told you if we took out this fractal, you had more upside, and it's exactly what you got. You went from 118 all the way up to almost 143. Look at your 1618 here, 143.39. And of course, this got up to 143 within 39 cents, guys. 1618 was hit. And this right now on a 3-day chart, look at the wicks. Looks like you're starting to roll over a little bit. You have a lower high on the MFI. Look at this huge momentum wave to get you here. And look at the bearish divergence that you have right now. Let's go ahead and put this on a daily, though. See what we got. Daily stretches everything out a little bit. You have this uptrend still intact, though. You have your low, you have your high, you have your higher low, and you have your higher high. But this could be the range right in the kill box, guys, that you want to watch and start seeing if we get some type of pattern, some type of tradable shape here on Solana outside of just hitting a target, right? So we'll be watching that as well. If we look at Ethereum, we got past our target. We finally got there, 35.75. So you know what? We need new fibs on Ethereum. Take off that. We exceeded it. We're at 36.50 right now at the time of this recording. So let's pull a fib from the all-time high and see what we did here and go to your market low. You got through the 618 and you're almost at the 786, which is 4,013. So let's add a fib here. We need the sacred slice, which is 707. Add the 707. 36.98, and that's what you wick through and currently are below 36.98. So the levels here on Ethereum, we're looking at a 3-day chart, Take out 3,700, come up to 4,000, could be your 786 retracement. But Ethereum, just like everything else, maybe it's still too early. I'm not telling you for sure, but maybe putting in a topping process. Okay. And if it is, we're going to watch this on the daily time frame. You can see Ethereum massively overbought here on the MFI. Momentum was still good. So, it's crypto, guys. This stuff can really move, but I want to see what happens here. We got to get a shape, got to get some type of pattern, daily time frame, 8-hour time frame, give us some type of pattern to potentially trade on Ethereum, or conversely to go up more for the upside. If this pulls back, starts consolidating, makes some higher lows, you can have a breakout to the upside. So I'll keep you guys up to date on that. All right, guys, hope you enjoyed the video. Please do like and subscribe. As always, I answer your questions in the YouTube comments. Consider checking out our Discord, and tomorrow the commodity and global markets video will be out for you. So be sure to tune in for that. Take care, everybody.